So we thought we'd do something a little bit different today. With everybody talking about the availability of credit at the moment, we thought that it might be a great opportunity to get somebody on who's really at the coalface of borrowing and lending, and that's the Managing Director and Founder of Mad Loans, George. We thought George could run us through the actual availability of credit at the moment, what borrowers should do to make themselves more appealing to the banks, and whether the banks are actually lending money and who they're lending money to. So I want to welcome George from Mad Loans, and we'll have a bit of a chat. Welcome, mate.
Thanks, Brad. Very happy to be on the show today, and lovely to talk about what's going on in the market and with the banks in line with the Royal Commission.
So I thought the easiest way to start this off was a few quick questions where we can just nut out, what's happening in the lending space. So the first question is, do borrowers need a broker?
Good question, Brent. I get this on a daily basis, especially in these complex times now, where all the banks are changing their policies and products, very competitive interest rates. I think now's a better time than ever to use a broker, and I think the average Australian is about 60% of Australians now use a broker, which is a lot.
Yep.
But it's like going and walking into a Holden, is how I always explain it, and asking the Holden salesperson, is a Holden the best car in the market? So that's sort of how I like to...
With the banks, going to ANZ or
yep,
Commonwealth Bank, etc. Okay, in saying that, has finance got harder to obtain?
Yes, finance definitely got harder. Banks are very got the microscope on customers' declared living expenses.
Yeah.
So now every bank in Australia will actually go through the last 3 months of your transactions.
Yes.
And go through how much you're spending on U-Foods, on Uber Eats, on Ubers, on Afterpay, ZipPay. They'll go through the lot, and this will be a part of your declared living expenses. So it's very important to know what the bank's looking for.
Yep.
Prepare yourself for what's when you need to
borrow money. Yep. So in saying that, can first home buyers still borrow money?
Definitely, and there's actually quite a lot of government grants as well at the moment helping them buy properties.
So first home buyers are able to borrow money. What about investors?
Banks are still lending out money for investors or first home buyers. It's just we've got to find the right bank for the right customer.
So it sounds like it's not all doom and gloom, but is it doom and gloom?
Look, from where I sit, writing the loans on a daily basis, I've never been so busy. We're putting on more staff. I think more customers are choosing to choose a mortgage broker. So we're definitely feeling busier. We're seeing people buy property all over Brisbane. From where I'm sitting, everything looks fine. The interest rates are very competitive, but it's just finding the right bank for the right customer.
So we've talked about first home buyers, talked about investors. There's money available out there to borrowers. Perhaps that's changed a little bit in the last 12 months, the way that the banks are looking at lending the money, if that has changed. So what are you seeing from the banks? What's their appetite for? And what are they really looking for?
Good question, Brent. I think the banks and lenders they still want to lend money, of course.
Yeah.
That's what they're in the business of doing. What I feel has happened is we're all trying to get a lot more responsible about the way we do this business.
Yeah.
I think we're putting a lot more effort via the lenders and from the brokers and our associations to really know our customer, really know what they're spending money on to make sure they can afford the loan that we're going to give them to. So they're getting a lot more responsible.
So not putting people in a position what they can't afford and going, it's really just lending money to people that for things they can afford.
And they've always been responsible, but now we're getting better at it.
Yeah.
We're really digging deep, asking the right questions.
Yeah.
How much, so you go?
Has technology changed that a little bit as well?
Definitely. For example, in these uncertain times, innovations happen now. We use a company called bankstatements.com.au that allows our customers to log in, and it actually calculates every single dollar they spend in exactly what areas. At Coles, for the last 3 months, they might have spent $600.
So you touched on this about the banks really looking at where everybody's spending their money.
Yep.
That probably leads into borrowers wanting to borrow money. What should they be doing? Should you talk about this? Is there something they can log on this before they come and talk to you, before they go to the bank, wherever they're going to get their money from, and really analyse what they're doing and perhaps do a health check and fix that?
I think if for first home buyers especially, get as much research as they can, watch videos like this, come to first home workshops that people offer, we do them as well. Of course, go to bankstatements.com and do it yourself and actually see where you're spending your money.
Yeah, might get a rude shock, some people.
People get a rude shock. People are spending more money than we've ever done before. So especially if you want to buy in 3 or 6 months, it's not a bad idea talking to a professional, a mortgage broker, or a financial planner, to sort of get you ready to actually get an approval. Because sometimes you just walk straight in, you might have a bad outcome. But if you think about it today and start preparing yourself, you can put yourself into a position to get approval.
So, that really talks about, what people need to do in terms of their spending habits, but what else is the bank looking for? Like, what if I'm self-employed? Once I've just changed job, I've moved from Sydney to Brisbane, I've only been working for someone for a month, or, I'm having a baby. Like, really, what's the bank? Have they changed what they're looking for in terms of those things?
Look, there's so many lenders and banks in Australia, and they all have different niches they're good at. So that's why it's very important, I believe, to use a broker, because some banks will take someone who's just changed jobs. They won't mind.
Yep.
Some banks need the customers to be in the job for about 6 months. Some people might have just started a business a year ago. Some banks don't mind, some do mind.
Yep.
So it really comes down to some banks would approve you for the loan and some wouldn't. But the only person who really knows is the mortgage broker.
These are the stories that I hear, and not just in residential property purchasing, but in the development world too, where somebody has been with a bank for a long time. It could be 20 years, they've done all their banking there. Maybe they've had a few home loans, but then they're getting rejected by that bank for a new loan. And it might be on, something that bank has just put a rule in place, and regardless of the history and the great record, that's obviously, they don't lend the money. So I don't want to harp on about how great it is to use a broker, but I would see that as a thing where you have the ability to obviously take that person to somebody else. Would that be right?
It just comes down to some banks have different, like most banks actually, have different policies on such things, which could basically mean you'll be approved or you'll be declined.
Yeah.
The basic one is, let's just say you change your job, and you might go to one major bank, they will decline you because they need you to be minimum 6 months in the job.
Yep.
Whereas another bank has no problem. One pay slip, they'll give you the money. So as long as you're in the same industry, and there's a couple other things, but they all have different policies.
Yeah. And so how do you stay? So that's the other thing is, if I walk into ANZ and I want to buy a home, and I bank with ANZ and they know all these things, obviously ANZ's got all of their policies. So how do you stay up to date, I guess, with then ANZ, Commonwealth Bank, Westpac, and then we've got maybe, I won't say second tier lenders, but not the major banks, other lenders. How are you staying up to date with their lending policies?
Great question. We have a very good relationship as a business, Mad Loans, with all the banks and lenders. Only last Friday I had a barbecue where there was about 45 different men and women there, from the INGs to the Latrobes to the Commonwealth Banks to the NABs. I'm on a first name basis with all these people.
Yep.
They're regularly coming in telling me what deals they're particularly doing or what policy changes they're doing, which will be able to help my customers.
Yep.
So obviously going to professional development days, and there's quite a lot of industry events.
Yep.
And emails and so on advising on what's happening in the market. But that's our full-time job, is knowing what bank does what deal.
Yeah, and going into this, I didn't really want to make it, Mad Loans, and I've done a loan through you, and we're looking at doing something else at the moment. And I don't want to be, just Mad Loans, but this is what I really like about what you do, is I've felt that the customer comes first, and it's really about that repeat business. So in the question of why does somebody need a broker, that relationship is obviously important ongoing, and whether it's to lend with Westpac this time and Commonwealth Bank next time and ANZ, it's about keeping that borrower, on the best path, obviously individually tailored for them. I see you do a lot of industry nights as well, where you train up a lot of people. What do you see with borrowers being the number one fear? So whether it's first home buyers, or maybe somebody downsizing, selling their principal place of residence they've been in for 30 years, and they're trying to time the sale of that into moving into a multi-res or whatever it might be, a different home. What are the fears that you see from borrowers?
I don't think there's much education around what we do.
Yeah.
I don't think people know simple things which we deal with on a day-to-day basis, but I find myself explaining in first-time buyer meetings the difference between variable and fixed.
Yes.
The minimum deposit required.
Yeah.
What's lender's mortgage insurance?
Yeah. What's
a credit rating? Should I buy a house, a townhouse, or a unit?
Yeah.
What suburb should I buy in? Is it okay to buy on a main street next to a train? I find myself really talking about just general products and explaining the whole process. Who do I talk to? Do I need a lawyer involved? What does a lawyer do? What's a rates adjustment? What's a water adjustment? What's a body corporate adjustment?
So, and I know you'll go on about that. So for me, that is like the whole property journey, not just, you know, how much money am I going to borrow, but for me, a little bit of that might come into people not knowing how much they can borrow to even put some framework around where they should be looking and what they should be looking at. So just expand on a little bit more, I guess the first step that you would take with somebody in that process.
Well, I normally tell people to come to a first home buyer workshop.
Yep.
Obligation free, they don't need to talk to me if they don't want to, it's catered, and I explain everything. I explain everything you need to know from A to Z as a first home buyer.
Yes.
What does the lawyers do? What does the building investor do? You know, and really, I think that's step one in a first home buyer's journey.
Yeah.
And then from there, they normally book an appointment. We go through how much money they can afford.
Yes.
Based on their salary, based on their living expenses, how much deposit they've got.
Yeah.
And I sort of work out the two and work out, well, we could do a scenario now that you could, for example, with your deposit, your incomes, we can afford a property for $600,000. And what does that look like? If we buy for $600,000, what are the buying associated fees?
Yeah.
$600,000 plus the fees is this. How much deposit you've got means we need a loan for this. What is the repayments on that? What does it look like? And that sort of, we just do role plays. I'm very visual with the whiteboard.
Yeah.
And then from there, if they're happy to get it done, we then talk about getting a pre-approval in place.
Okay, so somebody's worked out how much they're going to be able to borrow. So for me, going back a step, this seems like the first thing somebody should do is go and see a broker, or let's not just say a broker, but a bank or whatever, whoever it's going to be. Yep. You want to know how much you're going to be able to borrow before you can start dreaming of a sub penthouse if you can't afford one, because that's just the reality. We don't understand what we can afford, what fits into our current lifestyle. So come and see a broker and find out what you can borrow. And then I guess from there somebody can look at what type of property best suits their budget. And what other things then, like, you know, from a lifestyle point of view, do you like think that somebody should then try and understand?
I usually try and sit with my customers and try and make them think about the next 10, 20 years.
Yeah.
You know, if they're newly married, I sort of say, do you tend to have children? If you do, we're going to send the kids to school.
Yeah.
You want to send them to Villanova? Do you want to send them to Churchy? Or maybe we should be looking at a house or apartment closer to those particular...
To the school catchment, state school catchment, whatever it is.
For example, West End has got, you know, Brisbane State High. That's a massive reason why people try and buy West End, South Brisbane areas to get their kids into State High.
Yeah. And this is something that I think, even outside of borrowing money, is something that buyers really need to understand is their actual lifestyle, because we can all see, you know, we're sitting in a beautiful townhouse here and we can see things that we love, whether it's the view or the finishes and all these things, but we have to think about where we work, how we get to work, if we want 1 or 2 cars, where we go to the shops, where our family live, where we want to go to school. All of these things, I think for anybody who wants to borrow money to buy property, you really need to just understand how much you can borrow and what it is you need in terms of what the property provides, location, amenity, size, all of these things first, before we should go down the path of going to open homes, because that can obviously be a daunting process.
Well, the issue is if you get emotionally attached to a property without a pre-approval, you risk ultimately getting disappointed if you get it declined.
Yeah, so if somebody does that and they get a pre-approval, how long do those last?
Look, some lenders 3 months, up to a max of 6 months.
Yeah.
So that's a fair
6 months is, and 3 months is as well. And so people who you see come in early, who perhaps have done the health check, they come in early, they're really prepared. How long are you finding that buyer journey typically is for those people?
I would say, look, most of them get it done within 1 to 2 months.
Yep.
But there is probably about 25% that stay pre-approved for extension after extension after extension. So it's really important to really think about what exactly do I want. Do I want a house, or do I want a unit, or do I want a townhouse? What's my lifestyle? Yeah. And then start looking.
And so up front, we've talked about, you know, how you can make yourself a little bit more appealing to the banks, tidying up where you're spending your money, doing a health check, coming in and seeing how much you can borrow. If your budget's a little bit higher, maybe looking at the things that you can do to get your borrowing capacity a little bit higher. Maybe ask for a pay rise at work.
Well, just simple things like if you've got HECS, that's a liability. if you've got the money, maybe pay out your HECS.
Yeah.
If you've got a small car loan of $2,000 owing left, and that's sort of stopping you back. But look, a broker will look at everyone's individual needs and show them, listen, this is what you can currently afford with your current liabilities. But and everyone's got different circumstances. But maybe if you close down your credit card because you're not using it, that actually allows you to borrow a bit more, which means maybe you can get that nice townhouse. So it's really, you got to go talk to a professional, look at your individual needs and tell them what you want, and they can sort of show you. Maybe sometimes it's as simple as closing a couple of credit cards because they've got high limits unnecessarily, for example.
And so this is for somebody who's borrowing money, say for the first time, or they're borrowing again. But what about I'm 12 months, 24 months into my loan? I feel like everyone goes on autopilot and they just, make their repayment, make their repayment, make their repayment. Just tell me a little bit about the value add that there is for people who have a loan as well, who might want to buy an investment property, or they might want to upgrade in times to come. How can they look at saving or looking at those things?
What we've done in our business is we've made it standard to do annual reviews on our customers. So I like to see my customers every year forever. This is a long term for MAD loans. We don't just see a customer never again, we see them every year. In that annual review, we review their rates. Make sure the lender's still giving them a competitive rate. Otherwise, we're a broker, we have other lenders' options. But sometimes it's as easy as going back to the bank and saying, look, this is not competitive anymore, this is what we can get out there, and they normally reduce it for us. So
just before we go, how much could somebody save? Like, could it be $100 a month, $200 a month?
It could be in the thousands of dollars. I mean, it's not unusual. I think I saved someone, in excess of $5,000 a year the other day, and only wrote their loan 2 years ago. Kept him with the same lender. Just did a pricing request. And so there's a lot of money. You definitely need to get your broker to review your loan every year. To me, it's a massive saving. Plus, people's circumstances change, man. I mean, they might want to upgrade. They may want to buy an investment property. So in that annual review, I usually do a free valuation. So the properties actually went up in value, and your loan's been going down.
So they got a bit of equity there.
Maybe you can buy another property if you spoke to your accountant about that. My job is just showing the opportunities to my customers, up to them what they want to do.
So not just a broker to broker the deal, but a key consultant in somebody's property journey.
I love it. I love my customers. I love property, and I want to make sure that my customers are the cheapest rates all the time. Alrighty,
so we've talked about what people should do to borrow money, that whole buyer journey, what a broker does. Probably one of the reasons why everybody's wondering about this is we've had the Banking Royal Commission, which has really brought it to everybody's attention, I guess, how this works, whether it's a broker or the bank or whatever. So what do you see out of the Royal Commission, as a positive or a negative that's happened?
Look, I think there was a lot of things uncovered in the Royal Commission. As someone who's just writing home loans on the front, I believe it's a better outcome for the consumer. Everyday Australian, I think it's better. I think what the government's making us do is be more responsible, making sure we don't put people in situations where they're going to be in trouble in the future if rates increase. I don't see much of this stuff happening in Brisbane. I don't see people walking in my office asking for the maximum they can borrow. I think we're pretty grounded here, but maybe down south it happens more often than here.
Well, we've seen that massive price rise and drop, and we've been a little bit slow. Brisbane's a bit more slow and steady, wins the race.
Slow and steady, and so look, I think it's a great outcome for consumers. We have to definitely take a lot more steps in our process to ensure that we're definitely putting you in the right loan for your financial needs. Talking about fixed products, pros and cons to variable, going through your income versus expenditure, making sure that, with your current lifestyle, with all the Uber Eats you're spending, with all the school fees you've got, we need to take this into consideration seriously to ensure that we don't put you in a position which could affect you. Because
all of these things, like the reality is, it's not just, I can't repay my loan, but that's the stress that goes on the family. Obviously financial stress is a major issue in any household, and ultimately what we're trying to do is put people into loans that they can afford, and that's going to give them the lifestyle that they want, but without being a negative. And I sort of take that away from the Royal Commission as well, that we're really just trying to do the right thing by the consumer, the everyday Australian.
Definitely.
So I guess the other thing is we've then got an election that's coming up, and there's been a lot of talk about different policies and whether you vote Labor, Liberal, whether it's going to be Coalition, Greens, whichever party. Obviously, everyone has every party has a different policy, and just talk me around, you know, some of the stuff that's being talked about at the moment.
A lot of customers are sort of sitting on the fence. Not a lot, but some are saying, look, I think I should wait till maybe the election's over before I buy a property. And I just think that's a bit of a talk. I mean, let's say some people are talking about removal of negative gearing.
Yep.
Now that I think will definitely affect the market, because I think a lot of the market, a lot of Australians who are investing in property are doing it for taxation reasons.
Yep.
So if that is now removed, I think there will definitely be less, less demand for the supply that we currently have.
Yeah. With the investor, you know, especially with investors. And so I guess the other thing is there's so much media coverage on the Royal Commission, on the election, on property prices and all of that stuff. And I think it's easy to buy into those things. I see that perhaps it is people who are maybe half in, half out on buying property. And I often hear, I'll wait till after the election, or I want to see what the Royal Commission happens, or what are property prices going to do down south, how's that going to affect Brisbane. And then we hear population growth in southeast is obviously through the roof.
I just think it's going to be a long-term plan, mate.
Yeah.
I think it's for the people that we're dealing with, and you know, I think it's just going to be a long-term play. I mean, who knows what's going to happen to the market? And but it'll always be like that. But if you're looking for the right reasons, for example, like we were saying before, where do we want to live for our lifestyle? Where do we want to send our children to school? What sort of suburb do our family live in? If you want to buy for that particular reason, who really cares what's that?
Yeah, that's exactly what I was getting at. And I think that especially if you're selling another home and you buy a new home and you do it in the same market, I mean, we're always going to be on a bit of a roller coaster in property, like everything in life.
Not certain. It's impossible to say what's going to happen.
Yeah, so I guess we've probably covered everything that I wanted to cover. It's been really in-depth and really helpful. I think I enjoy talking about this, so I can tell that you do. And I really hope that anybody out there who's thinking about buying property, and like for me, I think about 20-year-olds and where they're going to be in 10 years. And if you plan this out, it's not a huge process, but if you say in 10 years I'm going to buy property, I can just put this much savings away, you know, I'm studying this at university, I should be able to get this job and earn this money. You can start planning this incrementally so far in advance. And often there's talk about the ability to be able to afford property in Australia is a conversation that comes up often. And really, it's not a flash in the pan decision. Like, this is something people should be planning for a long time. So what would you say if somebody was 20 years of age, they're not in a position to buy property, they're at university, would you have a chat to somebody like that and literally say, listen, you know, I'll spend half an hour.
Definitely.
Let's put you in a position in 7 years' time to buy a house.
I have so many customers that are, on a journey, a savings journey to get to their goal by 27, 25, 30, whatever it is.
Yeah.
But the sooner you come and see someone like myself, or a financial planner, or a mortgage broker, they're going to put you in the right direction to get into a house. You might still be living at home. I've got customers who living at home because they love that their parents wash their clothes and they make them breakfast and dinner, but they got an investment property. That's
fantastic. Yeah, exactly right. And if their parents love them being there.
Yeah, I mean, so that's something which we can talk about. I mean, what's wrong with living at home and buying an investment property? And for 14 years, when I get married, I have a house.
Yeah, exactly.
Where's the market going to be in 10 years? You know.
That's exactly right. You've got to be in it to win it. Mate, thank you very much for having a chat.
Hey,
I think there's plenty of information for everyone to take away.
All right, thank you for your time.
Thanks.
Appreciate it.
Cheers.